everybody.
How's it going?
Nice to see you on this lovely Saturday afternoon. At least hopefully it's lovely for you. We got a little bit of rain happening here.
It's not lovely here.
It's okay. It's a good time to talk about all the good quality things that we're going to talk about in the next hour. So thank you to anyone who's joining us. We're just going to give it a 30-second, 1 minute here. Hopefully everybody will be on right away and we can carry on with giving you the info you're looking for today.
Yeah, hassle-free landlord investing.
Oh yeah.
So it'll be interesting if we have some current investors on here. If people want to comment in the chat section, we would love to have your questions, and we want to make this as interactive as possible. And if you do have a house with us, it would be awesome if you can just type a number. How many do you have? 1, 2, 3, 4, 5. Our number, I guess, well, I don't want to say our number one investor, but our one investor that has the most amount of hassle-free landlord houses is actually 6. So that's something we get asked sometimes. So if people have hassle-free landlord houses, how many do they have? So yeah, so 6 is the number to beat if you want to come in and get as many houses with us as possible.
We get some back to you guys.
Okay.
All right. Okay. Looks like we're okay now.
Okay.
Yeah,
awesome.
thanks.
All right. So hassle-free landlord. So
Yeah.
I know we did this recording before, and we had done that when we were doing a different promotion. And so we wanted to just make sure we captured a new one talking about our 15% returns on our hassle-free landlord houses, and we'll go from there. So,
and in case anyone missed the other one as well, I mean, we just thought that we can never do this too many times because there's always people out there with questions. So no big deal. We'll do another one and answer all the questions. Hopefully you guys brought some with you today and looking forward to answering them.
Totally. So what is the Hassle-Free Landlord Program? Essentially, it is one of the offerings we have for an investment opportunity with our investment partners. So who are we looking for to partner with is kind of one of the most important questions, just to see if you might be a good fit. So we're looking for people who are going to be completely passive. So if you're so busy leading your best life and you understand the value of investing in real estate, but you don't have time to be a landlord or to do all the things, then that might be a great fit to work with us. It's people who have some form of cash or maybe equity in a property that they could leverage, that they could turn around and be able to put a down payment on a property plus qualify for a mortgage. And then it's other people obviously who have to understand that there is power in investing in real estate, and we focus on residential real estate. So if you've got those 3 things, so you want to be passive, you understand the power of real estate, and you have some cash and qualifications to be able to qualify for a mortgage on a rental property, boom, that's a great fit for us.
Excellent. Yeah, it really comes down to we're here for you. We're here to serve you with the Hassle-Free Landlord Program. We're here to build this program for you. It's not a box fit. It's not, we're going to make you fit this box. We actually customize it for you, the investor, which is unique about Epic Alliance and our products that we offer.
Yeah. And what's interesting about the customizable option is whether you're looking for cash flow or whether you're looking to build long-term equity in a property, you actually get to customize how your 15% return is paid out. Or it could be a mixture, right? So we want to find out what your financial goals are and then what it is you're working with. And then our goal is to basically get you to your future financial goals even faster than you thought possible.
Absolutely. And most people really like cash flow, which is what the Hassle-Free Landlord Program is known for.
Exactly. And we'll break down numbers as we get through this. But for right now, it works out that we just want to kind of break down the theory, and then we'll jump on the board and actually run real numbers. So if you guys have any specific questions, again, we'd love to be able to find out what they are and answer them in live time. But we probably will cover all the things throughout this presentation. So one of the really good questions, and we kind of just covered this, but is how you get paid. So again, customizable, and it depends on what makes sense for you.
And if you're looking to learn literally the mechanics of how you get paid, at the beginning of every month, you're going to receive rent for your property, and it will cover a bunch of things we'll get into, but it literally just goes directly into your account every month.
On the first, and you never have to deal with any tenants or toilets. So
yeah, baby.
So that's the biggest thing, is we actually go into a partnership with you and we become your guaranteed tenants. And then we and our company and our team members deal with all of the things and all of the stuff and all of the risk, essentially, is what we bring to the table. So at the end of the day, it is definitely a win-win opportunity. And I had a client call this week, and he said it so eloquently. I loved it. So
yes.
he was trying to explain to his wife, and she asked him, what's the catch? And he said, there is no catch. There is a trade-off though.
Correct.
And I love the way he put that, because that's exactly what this is.
Yep.
So we have to get paid too. We're not a charity, but at the same time, we do volumes. It's volume-based business. It's economies of scale. So for us, we're willing to take all the risk because we spread out our risk over hundreds, hopefully soon to be thousands of properties, and we can do that. Whereas if somebody comes in and wants to buy one property, and say your one property goes to shit, say that you lose the tenant, say that the tenant damages the place, say that you have a basement sewer backup and your tenant has to relocate, whatever might happen. I mean, there's a million different things that could go wrong on a property.
Oh yeah.
But essentially, you're the one that would experience all of that, right? So with us, we take all the risk and you just get the good stuff. And the reason that we do that is, and some people will ask us, well, why don't you guys just go buy all these properties? Well, at the end of the day, generally the bank is going to cut a person off. You're only going to qualify for so many houses. And then the bank's like, no, you're a credit risk, or you're whatever their reasoning is. So for us, we decided to leverage to create the systems and go into partnership with people who can do the things. And then that's where we align. So you bring the cash and credit, we bring our systems teams and knowledge, and that is the magic.
It's really that easy.
Yeah.
What do you need to qualify for our programs? Well, you must have some form of income coming in and be able to qualify for a mortgage. So usually that means a job or a career that's happening that'll allow you to qualify for a mortgage. And you must have access to the down payment funds to qualify for that mortgage.
For sure. And sometimes we'll get people who might be interested in working with us, but they don't think they can actually qualify. Maybe they're retired and they say, oh, I'm retired, I can't qualify. But that's a myth, because if you have a steady monthly income, whether that comes from pension or whatnot, it always goes back to the debt service ratio. And again, this is why we work with our mortgage brokers, and we would put you in touch with them to see if you can qualify, and they'll know if you do or don't. So don't count yourself out before you've had a consultation call, because you might be able to even squeak out 1 or 2 mortgages. And all of a sudden, what would an extra, $200 to $800 of extra cash flow a month look like? It really does add up.
Looks like a little house with money, doesn't it?
Yeah. And it just spits out the money every single month. It's very, again, hassle-free. That's the way we structured the program. So that is the biggest thing. So another question.
What are the risks?
So there's risk in everything. At the end of the day, you own the property. So
You do?
don't forget, you didn't give us any money. You put the 20% in and the closing costs, and you purchase your property. So the 20% is locked up in your house. So at the end of the day, we become your guaranteed tenants, and the contractual obligation is that we are going to take all the risks. But at the end of the day, if you're taking all the cash flow, we're going to earn the principal pay down. That's what we would be getting in the deal. But that we'll go over the exit strategies in a bit. But basically that's all in your control. But that's how we get paid. So we only get paid out at the end of the deal, providing everything went smoothly and according to plan throughout the whole term of the contract. And so if something were to go wrong, you own the property.
Sure do.
So at the end of the day, we wouldn't get our payout, which is the equity pay down, and you still control the asset. So, if you have money in the stock market, what are your risks there? What kind of returns are you getting? Right? These are questions you have to ask yourself.
It's true.
And it's all clarification.
Absolutely. Absolutely. So the next question, we got a question.
Yay.
So,
That's the Instagram handle.
Okay. I'm not going to even try and say that. Do you guys deal in Ontario? Well, that's a loaded question. It is a good question. Yes, for investors, we have tons of investors out of Ontario. As for the products, they're in Saskatchewan. There's reasons for that. You need the correct market to find cash flow. It's harder to get cash flowing assets in Ontario because the appreciation is so high, right? Whereas in Saskatchewan, here's our appreciation, just like steady and next to nothing. So our prices for our properties here in Saskatoon are near the 1% rule. Rochelle talks about this all the time. So what that rule is if you pay $150,000 for a house, you should be getting $1,500 a month rent, okay? And in Saskatoon, we can find those all day long. So that's why the products are here. But a vast majority of our investors are not in Saskatchewan. They're in BC and Ontario, where you guys have all that appreciation. And now you're able to take that appreciation, that equity, and turn around and utilize it to buy a rental property here. And you don't need to be here because we're here. Again, back to what Rochelle was saying about we work with passive investors because we're the active side of the partnership.
Yep. Exactly that. And so for us, we're a really good play for people who are in BC or in Ontario if they're looking to diversify their portfolio, if everything that they have are in those markets. Because generally, again, Alyssa mentioned, it's historically appreciation driven, cash flow negative or poor. Right. And again, I'm not saying there aren't some gems that do cash flow. If you have a property where you've owned it for 10 years, chances are it'll still cash flow. What I ask you though, is how much underperforming equity do you have in that property? Probably hundreds of thousands of dollars. If you turn around and ran
sitting there.
Totally. And if you can extract that to diversify and invest more strategically by leveraging, you can get further ahead faster because you're able to turn around and get your money working harder for you instead of you just doing all the hustling. So it's diversification. And again, some people don't like the idea of leveraging. That's okay.
Yep.
If you don't understand or you don't like the idea of good debt versus bad debt, that is totally, totally fine. Then you're not our people.
That's right.
But we're looking for people who understand the power of leveraging, the power of money, and they want to put that to work. And the way we look at it is if you have money and it's performing for you, you literally have little soldiers bringing in money every month. And at the end of the day, you're not having to go out and do all the work for it. You're able to diversify and have multiple streams of income.
That's right. Yeah. And I mean, another thing too to keep in mind is when you have that equity in your house, you're actually utilizing the bank to make money. Don't you like the sound of that? Instead of the bank making all of its money off you, you're making money off the bank.
And at the end of the day, the prime rate is so low right now that leveraging a property and getting a home equity line of credit or refinancing a property and getting a new mortgage, that's basically the cheapest money you're ever going to get. I mean, we're talking like 2.25% right now, guys.
That's almost free. That's almost free.
Like seriously, if you can turn around, get your money from the bank for 2.5%, turn around and make 10 to 15%, 15% in this case with hassle-free landlord houses, you're literally netting a double-digit return just by leveraging the bank. So anyway, if you're interested in learning more, this is where we implore you to book in a discovery session phone call and we can talk about your specific situation and then see what makes sense for you. But at the end of the day, it's just having the right mindset and then it's turning around and investing it properly. So, yeah.
All right. What happens if repairs are needed or vacancies occur? Well, guess what? It's all covered for you. When you go into a partnership with us, how this program works is we actually become your guaranteed tenant. Okay. In the documentation, Epic Alliance is your tenant. That means we have to pay you rent every month. And one of the trade-offs is we have the ability to turn around and sublease it so we can bring in rent. Okay. So by us being your tenant, we're on the hook to pay you rent, whether it's vacant or not. Woohoo for you. That's awesome. Right. And as far as maintenance and repairs go, it's our responsibility. That means if the furnace blows up, we pay for it. If somebody trashes the house, we pay for it. Why would we stick our investors for covering off the repairs and maintenance costs when we pick the property and we pick those tenants? To us, that wasn't logical. So that's why we tell people we take on that risk because it just made sense to us. And because the way the system works with us having hundreds and hundreds of houses, when we get one or two that are lemons, which happens, it doesn't matter because it's spread out over hundreds and hundreds of houses. A lot of people don't realize their most vulnerable position is when you only have 2 or 3 or 4 rental properties, because if 2 or 3 of them all of a sudden become vacant at the same time.
Or a pandemic happens and you don't get rent.
Bad.
COVID.
Yeah. It's not a good scene because now you're on the hook for all of those bills and you have nothing to offset it with. It can be a very dangerous position. Okay. So that's the difference of math, right? That's a volume of math. And when you make things bigger like that, you can mitigate that risk is basically what I was trying to say.
Awesome. Well said. So we have Rob on here. Thanks, Rob. He says, thank you, ladies. Joined late. Had to get my chili simmering. So hopefully that's simmering for you. And thanks for joining us.
We'll be there in about half an hour. We got time machines in the back.
Okay. So we have a question here too from Instagram. So if we invest in other provinces, what are things to watch out for?
Good question.
It is. So again, if you're talking about investing with us, I say you're good because again, we are very diligent and we are active investors and we do all of the things. If you're going to try and invest in a out of province and you don't have boots on the ground and you don't have a proper team set up, by golly, may the blessings of the
May the force be with you.
Whatever happens, right?
Mm-hmm.
Because we are right now.
Or you own a jet.
Yeah. Or you can be in two places at once, whatever. But honestly, it comes down to having really good boots on the ground. So for us right now, we're actually looking to expand into the States. So we're going to be doing this remotely. But I actually went down to each of the cities where we're looking at, and I built out the systems and the teams and said, this is how we run the program. Are you interested in joining us? Are you not? What's happening here? So we literally have realtors, we have wholesalers, we have property managers, we have contractors, we've got carpenters, we've got the teams ready to go.
Mm-hmm.
If you don't have that, please don't try and manage a property as an absentee landlord.
Mm-mm.
It's not a good idea.
Nope. No,
So-
we would never recommend that for anyone.
So this is why we literally started the Hassle-Free Landlord Program, because we are not your property managers, guys. The biggest fallacy with our company is that we are a property management company. We are not. We do not property manage anything that we do not control. All right. So
with the property manager, you still have to deal with tenants and toilets.
Exactly. They don't care if a toilet backed up. They're just going to bill you for it. They don't care if there's a tenant in the property. They're just going to bill you for it. They don't care if the sewer backed up and they had to go and spend $1,000, $2,000, $3,000 to get restoration in there. It's your money. What do they care?
That's right.
So this is again why people partner with us, because we care. We're footing the bill. We want to make sure that everything is being done affordably, but we also want to make sure it's being done so that the property stays safe, sound, and secure. So we run these properties like they're our own, because in the long term, we want them all to be our own.
Again, that's why it's called a partnership. Okay. We are your partners in this amazing cash flowing journey.
Totally.
Absolutely.
So we have an interesting question
that is a
here,
good
or
one.
a statement, I guess.
Yes.
So from Rob, it says,
We've heard this before.
Scotiabank stopped second investment properties with their home equity line of credit last month. Okay, Rob, is Scotiabank the only bank that gives mortgages? Yeah,
No.
I don't think so. So again, if you're going to let that stop you, dude.
That's why you go to a mortgage broker. That's why we have amazing ones on our team here. And if you don't even want to talk to us, you can go talk directly to the mortgage brokers if you want to get a second opinion or anything. We can throw that up in the chat here and give you their info. And by all means, you're welcome to reach out to them.
And Rob, just another thing, there is a way around it. There's a way around everything.
I didn't know if we should talk about that.
Yeah, let's go there.
We
Right?
love gray zones.
If you let your money season out of your home equity line of credit in a bank account for 30 days, Scotiabank doesn't give a shit where the money came from. Boom, done. So again, are you literally going to listen to things that people had said, or what, the actual conventional person is doing? Or are you going to be an outlier? Are you going to do things differently because you understand that we live in a world where, honestly, if we're not doing the things, then no one else is going to give a shit and do it for you.
That's right.
So for us on our journey to $1 billion, where we're at right now we're controlling over $90 million worth of real estate. When we first came out of the gate and we had these great grandiose visions and ideas of what we were building and what we were going to do and how it was going to have a huge ripple effect and whatnot, that vision's morphed and really grown throughout the years. But at the end of the day, people thought we were freaking local. They literally thought we were bananas. And they were like, yeah, okay, not sure what those girls are smoking.
is bananas.
Yeah. So at the end of the day, it really goes down to find your people, man. Like if it comes down to you're like, hey, you know what? You're telling me something I don't want to know. That's fine. Go find another person to ask the question to.
For
There's
sure.
always a million ways to skin a cat. And if you're just going to stop at the first no, you got the wrong mindset. And there's nothing we can do with a bad mindset. So watch yourself, watch your words. But again, if you want to book in a discovery session phone call, we can always chat about your specific situation. I digress.
Perfect. Rob, more.
Good.
He's coming back for more.
Good.
What is your current target market type? Single family? That is correct. We do 4 units or less because we work with residential housing. That's our niche. And that's also why, like, some people are like, who cares about your journey to $1 billion in 5 years? You know, because they're thinking commercial or multi-unit. And, you know, it is easier to get to $1 billion, but we're going to do that on single family homes.
One house at a time. And right now in Canada, our average house price is $200,000 for how we buy. In the States, it's going to be $100,000, but that's a lot of little houses, guys. It's a lot of volume. And that's okay, because we've set up our systems where we're prepared to go the distance and we're prepared to do that.
And I believe in our comments, we answered, I would be interested in a triplex. Thoughts? Yep, we have some of those with our investors.
We have fourplexes, triplexes, duplexes, and single family.
Yeah, we got
So
a brand new
suited.
duplex right now that's just about finished.
Yep.
And what is your mix of properties? That's the mix right there.
Yeah, so it's primarily, I'd say about 75% of our houses are single family.
Mm-hmm.
And then we've got the other ones kind of spiced in there. And honestly, we would love more fourplexes. They're really hard to find
Mm-hmm.
because by the time you go in and build them, it's just, again, you have to find the right zoning. You have to make sure you're in the right area to be compliant, da, 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 da. So there's just not a lot of inventory. I find that the easiest ones for us to find are either suited properties or duplexes.
Yeah.
And again, we always like having multiple doors because if you have one side vacant, at least you still got income coming from the other side. It's just a good play. But again, for us, it's really the niche is single family.
It is.
We have a lot of tenants that they really like having their own yard. They really like having their own house. And if you provide safe, sound secure housing and you're a good, you know, again, property management, or we provide good housing to how we manage our properties, we have a lot of long-term tenants who stay for a very long time.
Yeah. There's a reason our team members are called property care specialists.
Yeah.
Because we have to care.
Totally.
And I got a Jeffrey. What is the minimum amount of cash required? Great question.
So this is the other lovely side of investing in Saskatchewan. So our most affordable hassle-free landlord house that we have right now that we just sold to a client was $90,000.
Boom.
So you would need to come up with the 20% down payment plus the closing costs. So let's say you had $20,000 and you can get a mortgage. Boom, you can come in and buy a hassle-free landlord house with us. So our barrier to entry is so low, especially compared to people who are buying in Vancouver or Toronto or trying to buy in Toronto or Vancouver. Because if you don't have $100,000 liquid cash, you can't even think about playing in that market.
But spin that. Even if you can afford more proper, like a bigger property, say a $600,000 property, Rochelle uses this analogy all the time. Instead of buying one $600,000 property, look at ours and buy 3 $200,000 properties. And then what happens when you're earning 15%, Rochelle?
So on $600,000 worth of properties, your cash flow would be over $1,500 a month.
Boom.
Every single month. So again, if you can go buy a $600,000 property in Toronto and make over $1,000 a month in cash flow, by all means,
do it.
Have at her.
Yeah.
As far as I know, from what I've been hearing from people, it doesn't really exist.
Right. There you go. Mo, what happens if I decided to sell the house before or after the partnership is done? Okay.
So you are locked into a 2-year agreement and there's
Yeah.
no breaking it. It just wouldn't make financial sense because you're locked into a 2-year mortgage. And I don't know if you've ever tried breaking a mortgage, but the bank's going to make tons of fees and extra money off of you. And it wouldn't make financial sense for the deal. So you are locked in for 2 years, but at the end of 2 years, you actually have 3 options. Should we just go into the options?
Yeah, we might as well.
Okay. So basically option 1 is you, and you control all of this. You can say, this was amazing. I loved it. I already own the house. Epic. Let's do it again. And so we renew for another 2 years. So we basically send you a report card on your property. And that's going to show you exactly what happened on the property for the first 2 years. This is what we paid for property management, vacancies, maintenance, repairs, all that kind of stuff. That might not even matter to you, but we always want to make sure that we know how your house performed, or how you know how your house performed. And then we always recalibrate everything. So let's say the property taxes went up, the mortgage went up, the house insurance. So we would owe you more rent because we want to make sure you're still making your same 15% return on
We
the
have
cash.
to make sure you
you
are.
Yeah. So everything gets recalibrated. So that's option one. Option two is you can say, this was fun, but you know what? Maybe I've made enough money. I can go buy a house in Vancouver now or Toronto, whatever. So you can choose to sell the house back to us. And the way the contracts are written is we have the right to buy the house back from you for the same price you bought it for. So if you bought it for $200,000, we buy it back off of you for $200,000. And you might say, but what about the appreciation?
Right? This is Saskatoon, but we did create option 3. And in that, we did a calculated formula, okay, which would allow you to buy us out of the contract. Remember, it's your house, okay? So what would happen there is the formula is a breakdown of the vacancies, the maintenance, the repairs, the property management fee, and that's it, I think. Oh, and 50% of the principal pay down. That was the one I was
Half
missing.
of what we would have gotten 100% of in option 2.
That's right. So with that happening, say that came to $10,000, you bought a $200,000 house. Now all of a sudden, magic happened. There's unicorns running around Saskatoon, and everybody wants to buy a house here, and so it's now worth $250,000. But now with your report card, you can look and make that logical and educated decision on, hey, you know what? I think I'm going to actually turn around and buy the girls out of the contract because there's $40,000 I could potentially earn for myself from that appreciation. So really, this is all a win-win-win for everybody, right? And that's what we wanted with the Hassle-Free Landlord Program.
Totally. We have a comment in here from David.
Yes.
I am one of the first investors with these girls. This system works. Thanks,
Yeah,
David.
he's on like year 5.
Yeah, he's one of the original ones. So
Yeah.
We've been running this for about 4.5 years. And so, yeah, David was one of the original 28 houses. So been with us since the beginning, which is amazing. And we appreciate you. So obviously he stayed with the program. So he just renewed every 2 years. So he apparently likes getting the returns he's getting, finds it hassle-free, which is exactly how we pitch it.
Who doesn't like cash flow just showing up in your bank?
There you go. So it's interesting too, because we actually have, I'd say about 50% of our clients who get a hassle-free landlord house with us generally come back and buy more, or they buy more right off the bat. Again, a lot of our people in Toronto and Vancouver would turn around, go to the mortgage broker. Obviously, if they got lots of equity in their house, they've got lots of available cash and credit. Usually people are big earners out there, so they're making 6 figures. It's always based on income and expenses, all that fun stuff. But we have lots of clients that'll come in and buy 3 or 4 houses right off the bat. Right? So let's get our feet wet. Now let's just jump right in. Again, it's your choice. You have all the control, but we have a lot of clients that have multiple properties. It's a good play. So yeah. And then we have other question from Rob.
Yeah. Have you found rent delinquency since the COVID? What is your estimated percentage? It must hit your bottom line to some degree. Actually, hardly at all. Again, this is what's really cool. A lot of people thought we were nuts when we tackled the tenants that we did, because a lot of them are on social services. But you know what's happening right now while COVID's happening? We're still receiving the rent checks from the government. We've had, I believe, I want to say 4 tenants out of the hundreds and hundreds of houses we have that went, no, I'm not paying my rent because a certain someone who kind of pretends to run the country just decided to say, don't pay your rent. Okay. That's it. That's all it is. That's all we've got. So honestly, as far as it hitting our bottom line, when you spread that out amongst the hundreds and hundreds of properties, it amounts to almost 0, to be honest with you, for us.
Yeah, a couple things to keep in mind here though is we have a very different tenant profile.
For sure.
So we're in Saskatoon. For us to buy at the 1% rule, we had to buy in the heart, in the core, in the lower income neighborhoods, which is fine because we understand that. I live in the neighborhood. It's all good. You just have to understand how it works. So this is why it doesn't necessarily work for an outsider to come in and buy properties remotely, because the tenants will eat you up and spit you out. They just will. They're just tough. But we rule with an iron fist. All of our teams and our staff and everybody's taught how to manage the properties, and we run it all the same way. So at the end of the day, about 90% of our portfolio are social services tenants.
Yep.
So when Alyssa and I were building the company, we looked at this and we said, let's build a recession-proof business. right? Let's go after, because this is what works in our market. Let's go after social services tenants. And really, we kind of came out of this organically because the couple we bought the original 28 houses off of, the first $5 million worth of houses, that was their demographic and that was their tenant profile. So we just kind of learned the ropes from them and then made it our own and went that way.
Yep.
And so at the end of the day, we're at the Rentalsman monthly anyway, because there's always some people, say somebody gets out of jail or say somebody, loses their kids because some life event happens or whatever. There's things that go on and people can't pay rent. So at the end of the day, there's risk with everything. But again, this is why our investors don't experience that. We do. We take the risk, and it's okay because again, economies of scale, it's spread out over lots of houses. We're fine.
Yeah.
So a comment here from Julie. Thank you.
I gotta call you, Julie.
She says, looking so good. You're rocking it like crazy. Woo. Thank you. Yeah, no, we appreciate you. Julie and us, we go way back. So Julie used to she came into town and spoke at an event of ours that we used to host. So that's pretty cool. But yeah, she's doing great things out in Kelowna. Is it Kelowna? I think Kelowna.
Yeah, she's
yeah. And she runs, what is her group? OREG? O-R-E-I-G.
Yeah.
OREG in BC. So very cool stuff. Check her out. She's the Street Smart Diva online.
Yes.
So very cool. Awesome. And then we have a question here from Jeffrey. He says,
go ahead.
Can we pick between the US or Saskatchewan property when we invest, or is everything based on criteria? Honestly, the way we run it is that at the end of the day, the reason we're going into the States is because we actually have a wait list of 25 people that are already Americans in the States waiting for us to get hassle-free landlord houses. But they can't come to Canada and get hassle-free landlord houses with 20% down because they'd be foreign buyers. So this is why we're actually going down to the States to get US inventory to literally be able to have US American hassle-free landlord owners be able to buy those properties with 20% down. So if you're Canadian, we suggest staying in Canada, because if you went down to the States, you're a foreign buyer, so you'd have to put 30 to 35% down. It doesn't make financial sense.
Nope.
At the end of the day, if you already have US cash down there, because we do have some investors who already get paid in cash in the US and whatnot, and they want to keep their money down there, which is totally fine. Again, it doesn't really work necessarily for hassle-free, but it could work for fund to flip. So again, book in a discovery session phone call. We can talk about your specific situation, but the reason we're opening up the States is just to have American investors.
That's right.
At the end of the day. All right.
Absolutely. Can we find some Maltese? Oh, sorry, Rob asked this question. Can we find some Maltese and convert to low income through CMHC?
Not what we do.
No.
So again, we'll give a little bit of backstory.
Mm-hmm.
So with our company, and this is why for us, we've been able to literally, I mean, I don't know if you guys know the stats, but we did the 50 hassle-free landlord houses in 60 days campaign. So just the stats on that. So between April 15th to June 15th this year, so again, keep in mind, COVID happened, partially through this, whatever. We literally sold 52 hassle-free landlord houses to our investor partners. And in the back end, we actually funded 49 fund to flip deals. So we actually ran through 101 real estate transactions in 2 months. So we pushed through $20.96 million worth of real estate, guys.
Wow.
During COVID. So again, we're doing big things, but the really the secret sauce to how our company works is we run our own ecosystem.
Mm-hmm.
So we turn around and we work with investor partners to do the fund to flip. So that's people who are private money lenders. They either have cash, home equity line of credit, or underperforming invested funds. They turn around, they're going to earn a 10% annual rate of return. They basically fund our deals, purchase and renovation. That is what we do. We go find distressed properties, we lightly renovate them, turn them into cash flowing inventory, get them reappraised, and that's the inventory that we then turn around and sell to our hassle-free landlord owners. So then the minute we sell that house to our hassle-free landlord owner at fair market value, they get a mortgage on it. We hold it with them long-term. Our fund to flip investor gets their money back. But guess what? They don't want their money back. They want to make more money. So they're like, go buy more houses, girls. And we're like, okay, I guess we will. Right? So, okay, and so at the end of the day, this is the beauty of how our business works. It is literally creating our own ecosystem. And so that's the difference.
We got a great comment here. Warren, H.F.L.P is a proven platform. Thank you kindly for those kind words.
Again, we've been in the business for a few years now, and this is not our first rodeo. We've had people that are in and they're usually cycling. Most of our clients come back and they buy multiple properties. So some people will say how many people have actually opted to exit. So far, we've had 7. And everybody opted to exit on their properties for different reasons. We had 2 people who owned 2 houses. They exited because one was they were just buying them temporarily to earn some money before they got fully schooled up on how to be an active real estate investor on their own. So they wanted to exit because they made good money, and then they learned in that 2 years, which is fine. Then we had another couple where they actually got themselves into hot water on a property that they were active investors on in Toronto, and they had to pay a contractor, a horrible contractor, to go away. And the only money they could tap into was selling these properties back. They needed the down payment money. They were really hard up and they didn't want to sell the properties back because they were getting a good return, but they put themselves into those situations. Not our problem. The other 2 we sold, we bought back. It was not, we actually fired investors. So I'm not going to get into the backstory of it. It just wasn't a good fit. And we decided that they were not in an alignment with us. And so we needed them gone, and we needed to buy the properties back so they can move on with life. We can move on with life. And that's just the way it worked. And then the last one, we actually just did this last month, but we had some hassle-free landlord owners who had this property for 4 years, and they had decided that they wanted to sell the property back to us and then come in and bring more cash and qualify for a bigger property so they can get bigger cash flow every month. So they still got grandfathered in at the previous rate they were at, and then they're able to get more cash flow. So everybody's situation is different, and this is why it's all customized, and it's your decision. You have the full control, and we work with you to make sure that what we're doing makes sense.
There you go. So, Rob, is the U.S. target in the Trump opportunity zones, i.e. Buffalo? Honestly, what we did, I should say what Rochelle did, was go down to the States and look for more Saskatoons. That is ultimately what we did. We won't be announcing till, watch out, in probably about the mid-end July, where we're going in the States and where we expanded in Saskatchewan. And we're excited to announce that to people, but just not quite yet.
Yeah, but good question. But we are definitely not going for the opportunity zones. Most of the opportunity zones are actually C to D class neighborhoods, and that's not our play actually in the States. We're going for B class tenants in the States. So even before this whole COVID thing, we had decided that we didn't want to go with low income tenants because, again, there's nothing wrong with it. It's the play we do in Canada here, but the difference is we are the boots on the ground. In the States, we want to hire out all the property management, we want to hire out all the contracting, and we're not going to be able to have as much control on the property, so we don't want headache tenants. And honestly, Section 8 and low income tenants, they're really high needs. There's nothing wrong with it. It's a good play if you have the manpower to handle the houses, but your houses can go to shit really quick if you're not there to make sure that everything is running really, really smoothly. And so we're going for B class tenants. So people who are working at Walmart, Dunkin' Donuts, they're working at gas stations. So all the places that still stayed open during this whole COVID thing, and people were still able to pay their rent because they were still working. That's really the people we're going after. People who are, they're going to be happy to live in safe, sound, secure rentals, but they're never really going to have enough money to be able to afford to buy their own property. So providing we provide good houses, generally they're going to stay a long time.
For sure. Well,
do we have any more questions?
Nope. Did we miss anything here? I think we covered almost everything here. We should probably get to some numbers on the board.
We should, definitely. So we're just going to move over to the board here. And then at the end of the day, we will break down the actual numbers on a $200,000 property.
Cool.
Okay, so we're going to talk about a $200,000 property and what that looks like. So I got my cheat sheet. So if you guys are interested, we can actually email you the investor PowerPoint presentation we have too. But let's go with this. So we're going to say that we're going to say this guy here. Sorry, I'm not an artist. I'm a real estate investor. So this guy is going to be $200,000. So from there, you as the investor would be responsible for putting a 20% down payment. So in this case, the down payment would have to be $40,000. Okay. Plus, you would be responsible for putting in the closing costs, which are usually about 1.5% of the purchase price.
In Saskatchewan, because we don't have the land transfer tax like a lot of other provinces do. So very reasonable costs here. And we also have an amazing law group we work with that if you happen to work with our team, you're going to get a discounted wholesale or large volume operate.
So again, that's the beauty of working with us. We already have the systems ready to go. We've already got people on our team raring to go. We've been through this dozens and dozens of times, sometimes.
We're hundreds now.
Yeah, dozens of
It's like-
dozens of times a month, right?
Yeah.
So when it comes to closing on the properties, we work with one law firm to close on our side as the seller. And then we actually contracted out the buying side for our hassle-free landlord owners with another law firm. So generally closing on a property here, the lawyer cost would be around $1,000 to $1,200, sometimes higher, but again, a good law firm is usually that. So we've pre-negotiated that our investors are going to get a fixed cost of $850. Not bad. Again, every dollar does count, and we want to pass the savings on to you guys because at the end of the day, we still owe you the return on the total closing costs.
Right?
So yeah, we like passing that on. So you would be responsible for bringing $43,000, and we're going to make sure that you're going to earn a 15% return.
Ooh, all day long, people, all day long.
And again, that's annually. So in 2 years, you're going to earn 30% on your money. Some people ask, is that 2 years? We're like, yes. So over 1 year, it would be 6,450 times that by 2 years. So we would owe you $12,900, and we divide that by 24 months. So we would owe you $538 a month of cash flow.
That's a house making money for you.
So at the end of the day, I'm not sure how many of you guys on here are actually active investors or passive investors, whatever your play is, but I would love to know how many of you guys have a property that's similar to $200,000. You've got $43,000 in there, and your cash flow is over $500 every single month, completely passively. If anybody else is doing it, I would love to know, because obviously that's a great market, and we should probably put that on our radar.
No kidding.
So at the end of the day, we're going to erase this, and I'm going to actually talk about the numbers of what the mortgage, property taxes, insurance, and cash flow looks like, and what your total rent deposited into your bank account on the first of every month would be.
Ultimately, the best thing to do is to get all the finite details is to call, to book the discovery session. Then we can break out actual numbers for you. You have to understand everything we're going to talk about today is theory, because that's all we can do. And we can run theory for hours and hours and hours. But the best thing is do that call, get on the phone, and let's actually break out your scenario, okay? Or even if you just have something that you want clarification for, so you could tell someone else about this great opportunity if it doesn't fit for you, give us a call. So we got, what are we, oh, we're just doing, oh, we're doing the rent breakdown now. Excellent. So this is the cool thing. Remember how I stated earlier that at the beginning of every month, your rent is just going to be direct debited into your account, just like any kind of paycheck or anything else like that. Rochelle's just breaking out what that'll look like for you so that you can see how you're left with your $538 a month cash flow. Okay. I always love asking people, you know, what would, say you had two of these $200,000 houses, what would an extra $1,000 a month cash flow actually do to change your life or a family member's life? We've heard, oh my gosh, the stories we get all the time. Your cash flow from the H.F.L.P program changed my life. My significant other was allowed to quit their, or not allowed, but able to quit their job because of your program. Oh my gosh, my son, daughter got the extra education they needed because we invested in this program. Like, we hear these stories all the time, and we love that. So by all means, feel free to reach out if you are an active investor. Tell us the good things that have come from you investing with Epic Alliance Inc.
And we're always looking for more testimonials. So if you haven't given us a Google review, or if you haven't sent a Facebook review or whatnot, we love that kind of stuff too. So we appreciate it. Okay, so this is a breakdown. So we've got the Hassle-Free Landlord house. Again, this is based on a $200,000 property, right? So the mortgage would be roughly $799, taxes $136, insurance $100. We talked about the cash flow we owe you, $538. So the total rent that is deposited to your bank account on the first of every month would be $1,573. Sometimes people get misconceptions of what the Hassle-Free Landlord Program even is, right? So we've had some people say, okay, well, if you deposited to me $538, I still have to pay the mortgage, property taxes, house insurance. I'm like,
Yeah, you know.
Like, guys, no, it's a rental property. We pay you for all that. You don't go out of pocket on anything. You're going to get all that covered in the rent, plus then you do what you want with your cash flow.
Yep.
Right. So some people will say, but I want $1,000 a month in cash flow. That's great. Then either buy 2 houses of 200,000 or buy a $400,000 property. It's all a sliding scale.
Yep.
The returns are the returns. The numbers
Yes.
are the numbers. So if you want more, then invest more.
But
It's
where else can you get a 15% return?
And again, sometimes people will come to me and say, oh, well, I can go invest here and I can make here. And I'm like, then
Then
go,
go.
be free. If it makes more sense for you to invest somewhere else, then do it. Right? Doesn't matter to us. Like if it's a good fit, great. If it's not a great fit, no big deal.
We're not egotistical enough to think that we're the be all end all for everyone out there. We're only looking to partner with the people that realize the trade-offs are worth it for the partnership. That's what we're looking for. If you don't feel that that is the win-win for you, by all means, go elsewhere. That's great.
Yeah. And so we're not here to sell you. We're here to serve you.
Yeah.
And if it makes sense if you find that what we're talking about is in alignment and it works because you like to work with people who are in integrity and you like to provide safe, sound, secure housing, then by all means, book in a call. We'd love to chat with you. And in the meantime, even if it's not a good fit for you right now, maybe you don't have funds available, or maybe you are very active and this isn't a good fit for you, but you know somebody who might be interested in working with us, we actually have an amazing referral program.
Oh, yeah.
So if you introduce anybody to us and they end up buying a property, we actually pay you $1,000 referral fee for every deal they do. So something to keep in mind here is the average investor in their first year investing with us does 3 deals. So you would get paid every single time they do a new deal. So that's for any new hassle-free landlord houses or any fund to flip opportunities. Now, we didn't really touch on fund to flip. We have another explainer video for that, no big deal. But for those ones, again, the fund to flip is different. We pay a 10% return, but the money usually cycles over every 6 months. So if a person comes in and funds a deal and you get paid $1,000 referral fee for that first flip, in 6 months, when their money turns over onto another one, if they choose to reinvest, you get another $1,000. So it's a really cool way to have another potential stream of income, right? So in the background, what Bailey and I are working on right now is Bailey, we just announced this, is now the affiliate coordinator. So in July, this is going to be getting started hardcore, but we're actually starting our new affiliate army. So the affiliate army is going to be a weekly training call where we can show you how to best share our products and what we have to offer so that you can generate a potential new stream of income. So we have some investors that get paid every single month for simply just talking about our products and who we are and what we do, because you don't know what you don't know. And for us, our biggest thing that gets me just riled up is I feel like we're literally Canada's #1 passive investing secret, and it's frustrating. So we just want to inspire as many people as possible to get talking about who we are, what we do, and then share the opportunity. And if it's not a best fit for people, no big deal. But at least the opportunity is shared.
So Rob has a question. I have a brainwave example. Let's say I have 43,000 in RRSP. Can I work the first time home buyer into your plan? Allow me a 5% down payment.
Do you live in Saskatoon, or are you willing to move to Saskatoon? If the answer is no, then the answer is no. Sorry.
That's a little too, trying to throw too many things into the pot. Like we can work with RRSPs, but that's again through the fund to flip program Rochelle was talking about. Again, TFSAs, all of that are done there. Complete home lines of equity lines of credit. That's all done through fund to flip. But in the hassle-free, you must be able to qualify for a rental property mortgage
and put down liquid cash.
Yeah.
So we have some people that say, well, I have $40,000 in RSP and it's not doing anything. Well, the only way that you can use it with a 20% down payment is you'd have to pull the RSPs out, which you're going to get taxed so heavily, it's probably not going to make financial sense. Now, at the same time, this is why I say booking a discovery session phone call, because I've had some people where they say, oh, I'm not working this year, I have no income. That's the perfect time to pull out RSPs, because you're going to be in the lowest tax bracket. So your taxes are going to be very minimal. Right? Yeah. So again, this is the kind of stuff we love to be able to cater to people, but I don't know your situation.
No.
I don't know all the right questions to ask you because I don't know all the details, right? And this is why we love to be able to help people one-on-one, and that's really the call to action.
So is that Celise?
I don't know.
Solis?
I don't know.
Okay.
Sorry, I can't say your name.
What does Epic get out of this? Great question. Actually, we get lots of things out of this. We touched on how by partnering with investors, we don't have to go through banks. Banks are slow. Banks limit you. Banks are a box. Okay, that doesn't work for us to be real estate investors at all. So that's one of the biggest things we get from our investors. Number two, we are doing this. We are creating income utilizing none of our own money. Okay, so that's called an infinite return. When you're making money off an investment and you've put nothing other than time or sweat equity into it, it's an infinite return. That's amazing. So that's another thing we get from our investors. And for us, like Rochelle always breaks out, once we're at $1 billion and we're getting a couple few percent from each house, that's spread
Of
out
appreciation.
of appreciation, or you know, even on the returns and everything, we're laughing. Okay, like when we with the principal pay down that we also are keeping as a savings account for us. So there's all these different areas where we're making money partnering with you.
The biggest thing is how our business is structured. So you have to remember that we take distressed properties, we do a light renovation, we force the value. So we get paid up front on the properties.
Yep.
Right? Then at the end of the day, we are going to potentially get paid something monthly. Again, some of our investors, by the time you get a 15% return, that's a very generous return. It generally will wipe out all the cash flow from a deal. And that's okay, because every time we're paying you the mortgage, you are paying that to the bank, and about 50% of that is going towards principal. And then 50% is going towards interest. And if you're taking your full 15% return in monthly cash flow, then that principal gets credited to us at the end of the day, right? So that's basically with the Hassle-Free Landlord Program properties. For us, we look at it like they're little piggy banks.
Absolutely.
Because every time we pay you the rent, we know that there's a little bit in there that's going to be coming back to us at the end of the deal. So for us, that's how we basically balance our business model. So at the end of the day, when we pay our bills at the end of the month, that's by flipping the houses. How we're building our long-term wealth is by having these hassle-free landlord houses. So for us, when we were literally structuring the business in the beginning, we were like, okay, great, flipping is awesome, but that's not building long-term wealth.
No.
Building long-term wealth is built through revenue properties.
100%.
So we wanted the best of both worlds, which is what we've created.
Yep.
Hope that answers your question.
Yeah.
Okay, awesome.
Cool. Thank
Do
you.
we have any more other questions? We've got about 5 minutes here before we're gonna wrap up.
Okay.
I'll speak if that's okay.
Okay, Bailey's gonna talk here.
The same person says, are we concerned about the market due to the current economic conditions?
So interesting tidbit, Saskatoon is actually temporarily a seller's market.
Yeah.
So we've been a buyer's market for like 5 years now,
Yeah.
after our market softened, which is fine, because for us, we always buy, we make our money in the buy, and we buy at the bottom of the market. So there's really nowhere for the market to go, right? So even though we've bought over the last 5 years, all of our houses have either held their value or gone up in value. Again, it's all in how you buy. We don't buy high end, we don't buy condos, and those are the two areas that took the biggest hit when our market softened. So at the end of the day, this is why we talk about Saskatoon being very steady, very boring, very predictable.
Yeah.
Right? That's why we buy here. So again, if you're buying in Toronto or you're buying in BC, I got nothing for you guys. I don't know what's happening in those markets. But what happened right now because of COVID in Saskatchewan, or Saskatoon specifically, is we're always buying houses. We buy about a house a day right now. And at the end of the day, we got to always hustle. We got to find those properties. But what happened is because so many people were scared to list their properties because of the COVID thing, they didn't want people coming through their house or whatever, and people didn't stop buying. So it actually created a shortage of properties in the market space. Did not see that one coming. So right now, I think it was like 2 weeks ago, we actually had 3 other realtors call us asking if we would sell their clients houses that we just bought. I'm like, you're that desperate? No. So we buy for the long-term buy and hold. We don't sell our inventory. We don't flip it. It looks like we're flipping it because of the way we relist on MLS and stuff, but we just do that to sell it to our investors.
So Rob, the best webinar in honest terms I've attended.
Thank you. That's amazing feedback.
Yeah, thank you.
Again, I don't know if you watch our stuff, Rob, but we are very, very transparent, and we run everything with integrity. And so again, at the end of the day, I'll have a discovery session phone call with somebody, and I can tell if they're not in alignment with our value systems. And so after 5 minutes, I'll just call a call off. I'm like, hey man, this has been fun, but it sounds like you're not our people.
No.
So you can't invest here. I'm done. I'm hanging up now. I wish you the best life and move on. Right. And so this could be triggered by somebody being like, oh, well, I can go invest over here and make more money. I'm like, good, go do that. Bite. Right. I just, I'm not going to undervalue us. We've already proved ourselves.
Yeah.
We know our system works. We have hundreds of very, very happy investors. And we, again, this is why we're going back to the affiliate arm, because we want to get our investor clients or people who know who we are talking about us. Instead of us going around and telling people how awesome we are, we'll let everybody else do it. Right? The proof is in the pudding. We've proved ourselves. So the other side is a trigger for me is I cannot deal with people who have ego or entitlement. So if people come to me and they're like, oh, well, I've done this and I've done this and I deserve to be paid more, I'm like, you know what? You sound like a douche. I'm just going to have a phone right now. So have a good life, but no. Right? And so again, like some people can't handle that.
No.
Not my problem. So yeah, I mean, honest. Yeah, I mean, probably to a fault, but it's just how we roll. So yeah, any more questions? We got 2 minutes to answer any more questions if you guys have.
Well, what we could do is a recap on the H.F.L.P program.
Yep.
So number one, it's a 2-year term. Okay. So you must commit for 2 years, not a super long length of time. That's one of the reasons we picked it. We figured most people could figure out their lives and their financial situations up to a 2-year span. And then also on the mortgaging side, you usually get a really decent rate for a 2-year mortgage.
2-year and 5-year are usually similar rates.
Yeah. So that's 2-year term. Okay. Then remember, all you're going to do is you need to qualify for the mortgage. So you must have the down payment. You must have the capability to qualify for the mortgage. Okay. That's the next things that you absolutely need. And the closing costs. Sorry. And then from there, obviously it's a good idea you have a bank account so we can deposit the rent money for you. Okay. You'll pick out a property. What'll happen is if you qualify for 200,000, our team is going to turn around and send you a few houses to pick from. Three. There you go. We're going to send you 3 houses to pick from. You're going to pick the one you want. Bada boom, bada bing. You work with our mortgage brokers and now you're a cash flowing H.F.L.P landlord. So from there, after the 2 years are pretty much done, you're going to receive a report card. In that report card, it's going to break out your 2 exit strategies and your renewal option. Okay. So your renewal, basically we rework the numbers, make sure you're making your 15% going forward. We redo the paperwork. Everybody's happy. That one's done. Option 2 is, hey, you need your down payment funds. Oh, it's the wrong math here. You need your down payment funds back. So you're moving to the, you're $40,000. You're moving to the Cayman Islands. No problem. Epic is your built-in buyers. Done. Okay. Option 3 is you're going to turn around and buy us out of the contracts because remember, you own the house. We just control it with paperwork. We are your tenants. Okay. We are your guaranteed tenants. And that is how we gain control of the property. We sublet it and turn around and collect rent and do all the maintenance and repairs. Okay. So in option 3, we take all of that. It's a calculated formula. Any vacancies, any property management, any of the things we've paid for are written out so you can make that educated decision on if you want to buy us out of the contracts. That's it. And then you just sit back and you make 15%. That's it. It's really that easy, guys.
Awesome. Do we have any more comments or feedback or anything? Or are we good?
Ron said he loved the recap.
Yay. And at the end of the day, the moral of the story, guys, we are not a property management company because we're nobody's bitches.
Nope. And we are here to just share in the making of the money.
Woo! So thank you for joining us and we hope you stay epic. Oh my God, Bailey, just get on the screen and shut it off.